Melissa Otto, head of Visible Alpha Research of S&P Global. You're watching Taking Stock.
A big market sell-off here into the close sets the stage for today's closing bell here on Wall Street. We started the sessions early this morning in negative territory, and that has been the tail of the tape in no uncertain terms. We are expecting to see the S&P 500 finish down on this trading Thursday 1.7%, just about at session lows. That and so much more sets the stage for today's show, and thanks for watching the show. You're watching Taking Stock. I'm your host, JD Durkin. Just moments away, one and all, from the ringing of the one, the only iconic closing bell here at the New York Stock Exchange. The team from Bausch & Lomb, that is ticker symbol BLCO, here to do the honors on a day where we really see that risk-off trade front and center across the board for investor sentiment. Volatility catching a bit on the day with the VIX creeping back up to 21 for the first time since last Friday's session. All of the Magnificent Seven mega cap stocks down in negative territory for a fair bit of profit taking for a lot of those mega cap names. Those losses being led by Tesla, very volatile in the day, down 6.5%. Nvidia shares down 3.5%, and the team from Alphabet down 2.5% as well. As if all of that were not enough on this Thursday, the crypto majors all down in no uncertain terms. That includes Bitcoin back down below 100,000. We will talk about that and much more today on Taking Stock. Jacob Sonnenschein, our good pal from Barron's, is on deck. He'll join us right after the bell. But for now, the team from Bausch & Lomb here to bring about a close to today's financial markets. Usually gotta wait for the gavel just in case here. The team from Bausch & Lomb set to do the honors, here to do the honors here at the closing bell. Bring about the final trades. The S&P 500 for the tail of the tape down 1.65%. The Dow 30 also exactly down 1.65. The NYSE Composite Index down 1.2. And as is often the case for a more defensive, risk-off-minded day, the Russell 2000, the small caps getting hit the hardest, down 2.7%. All right, let's bring in Jacob Sonnenschein, longtime friend of the show from Barron's, here to talk about general price action and a lot of other key stories top of mind. Thanks for being here as always.
Thanks for having me.
Give me your sense on the markets. I mean, ironically, in the scheme of things, we're not that far off all-time highs, but we kind of go session by session. The narrative seems to shift just that much. The AI trade kind of off the table. We're back into defensives. What are you seeing on a day like today?
Well, first of all, we're not that far off the highs, but what I've been noticing today and on a lot of days in the last several weeks is elevated volatility. Even when you go up 1 or 2% on the dead cat bounce, you have extremely elevated volatility, not extremely, but you're above 16 on the VIX, and what it means is that the market sees a wide range of potential outcomes for stock prices. So a day like today is just another sign of a little bit of angst of several risk items.
Yeah, and ironically, a lot of these all-time high sessions came during the federal government shutdown. With thing in the past, it had been the longest federal government shutdown in U.S. history at 43 days. What did you make of how investors reacted as the shutdown continued, and what should be top of mind through the lens of market participants now that the lights of the government are finally turned back on?
Well, you saw once the shutdown ended, or once you saw that it's clearly the end is imminent, you saw the market go, okay, sigh of relief, we're going to get economic data soon, and the Federal Reserve's job is not going to be extremely hard. The shutdown was just a blip on the radar. And you saw on that day, a few trading days ago, you saw the market well into the green. This is not really a major issue. Some of the more major issues for the market, the several issues that the market is a little bit angsty about is A, how much excess data center spending is there within the tech complex? B, is private credit an issue? It's not an issue today in my opinion, but there are some things beyond the government shutdown that do matter.
I know there's a few key names in the equity landscape you're keeping your eyes on. Let's start first and foremost. What are you seeing in the name Philip Morris these days?
The first thing I'm seeing in the name Philip Morris is that it's not an AI stock. It's done well, but it's not absolutely soared like AI stocks. I want things that are not correlated to the AI trade because that is increasingly risky from a near-term perspective. What I love about Philip Morris is that it is moving from smokeless, traditional cigarettes into smokeless products. Those are higher margin products. They're growing sales low single digits. These are products that are getting adopted really nicely. So they have a lot of revenue from that. A lot of that could flow to the bottom line and has been. Earnings per share growth because of stock buybacks could be in the double digits. If you can get it at a below market multiple, you're going to ride that stock on the way up.
Let me ask you, I'll let you take your pick. We got Intuit, I got Twilio, I got Carrier. Which of those is jumping out to you? I know you've been tracking all of those names in recent sessions.
I like Intuit. If a technical trader looks at Intuit right before earnings on November 20th, they're going to say, oh, it's been up to 655, and then it gets knocked down from 655 into the 640s. It looks like the market's a little bit concerned about something. My boss said, oh, it's coiling to make a move. I don't know if it's going to be up or down. But on earnings, when you see that Intuit's businesses, it's like 3 or 4 different segments are close to double-digit revenue growth. When you see that MailChimp, which has decelerated, I think it'll re-accelerate because the company has refocused its resources on MailChimp, which helps companies market. You're going to get confidence in close to double-digit revenue growth, and this company has always been able to do that while also controlling costs and expanding margins. So earnings growth could be really good for Intuit.
Speaking of earnings growth, speaking of confidence, we got the team from NVDA. If there is a Super Bowl for earnings season, it is next week. It is NVIDIA. I believe it's Wednesday of next week after the bell. What will you be looking for? This is the sort of thing, it's the most consolidated, the strongest name in the S&P 500. Is it kind of make or break for the broader earnings season?
I don't think it's make or break, but I think when NVIDIA reports earnings this November, it's really, the quarter's going to be great. What I want to see, I don't want to say the word guidance because everyone talks about that, but I want to see that in the demand from NVIDIA is matching what we saw from Microsoft and Meta when they talked about stepped up rate of growth in capital expenditures. So I just think the market wants to see NVIDIA confirm what we saw from Microsoft, CapEx, and Meta, because that will uphold the market at current levels.
It has been an absolutely wild day here on Wall Street. Who better to kick off the broadcast than Jacob Sunshine at Barron's? My man, thanks for being here as always. It's really good to have you. Josh, going to grab your microphone. Todd, you and I are going to head this way, and we are going to go for a walk. An exciting day down here at the New York Stock Exchange for opening bell today. The teams from Polymarket and TKO announcing a new multi-deal partnership for the event contract space, specifically for UFC fights. And that, of course, brings us to a closely watched event contract on the day for Polymarket. We are following for you all what will be, in the eyes of Polymarket participants, the largest company in the world by the end of 2025. 89% likelihood in the eyes, excuse me, fellas, it will be NVIDIA, 9% chance Apple, 2% chance Microsoft, and only 1% Alphabet. As of right now, the most consolidated name, the biggest market cap stock, we were just talking about it with Jacob there a moment ago. It is, of course, NVIDIA with a $4.5 trillion market cap, although Google, Alphabet's actually the best performing of those names, up 46% year to date. All right, Todd, we're going to take a look at one NYSE-listed company, a notable on the day. It is, of course, the House of Mouse, one of the biggest stories on Wall Street today. Also, unfortunately, one of the worst performing stocks in the S&P 500. Been a long time since Disney had a down session like this, down almost 8%, a big gap down to 107. It has not traded at those levels since May 9th. A beat on earnings, a miss on revenue, but because of the ongoing dispute with YouTube TV, get this, Disney is losing $30 million a week. That is $4 million a day for the 10 million YouTube TV subscribers who do not have ESPN, do not have ABC, do not have Monday Night Football, which of course is Raiders Cowboys coming up this Monday. Streaming a bright spot for the company. Parks also a bit of a strength, but clearly investors a bit concerned about the path moving forward, given the shares are down almost 8% here on Wall Street today. The New York Stock Exchange's very own Kristen Scholler sat down with CEO Tom Pickett of Headspace to discuss all of the ways the company is using artificial intelligence to elevate mental health care. Take a look.
We're here at the Health Innovation Conference 2025 at the Venetian in Las Vegas, talking all things the future of health and health technology. And I'm pleased now to be joined by a key leader in attendance. He's the CEO of Headspace, Tom Pickett. Tom, welcome.
Thank you. It's great to be here.
Yeah, great to join you here at Health. And I want to hear from you as it relates to Headspace. What do you see as the number one challenge in the mental health space right now?
Yeah, the biggest challenge in the mental health space is frankly the size of the mental health epidemic, if you will. Nearly 1 in 5 people have a diagnosed mental health condition. And we know more broadly than that, that most of the population suffers from stress, anxiety, sleep, mood. And so we have a real challenge in terms of if this many people are affected, and by the way, the younger generation seems to be affected even more than the older generation. How do we solve this? And our current mental health stance is that we send everybody to talk therapy, which doesn't scale, right? We don't have enough therapists to address the magnitude of this kind of problem. And then frankly, economically, like we can't afford to have everybody have their own personal therapist. So we need, a broader set of solutions, some new solutions to help make an impact here.
And to that end, what are the solutions that Headspace is providing to respond to this challenge?
Yeah, so at Headspace, we have a comprehensive mental health platform. We start with meditation and mindfulness content. Many people know Headspace from meditation and the history we've had over the last 15 years. We also now have Ebb, which is our empathetic AI companion. So you can actually talk to Headspace now, and we can learn more about you, and it's really helpful for like emotional regulation. We have coaches, therapists, and psychiatrists. So we have a full spectrum of care that we offer. Our idea is like, how do we expand access, create a much broader set of tools that we can make available, and ultimately do that at a cost structure that is going to really help the system unlock access to many more people.
Mm-hmm. What excites you about the future as it relates to this?
Yeah, I think we are in an amazing moment right now, certainly with the technology we have available. I tell our team all the time that I think mental health tools and resources are going to look completely different 2 years from now, that relative to what they are today. We have a very limited tool set. The idea that you can now get much more personalized, you can actually have a in the moment care through AI. I think we're just at the very beginning, but I am very optimistic that over the next couple of years, we're going to be able to develop a broader set of safe, AI-driven tools that complement the human care. I think the human care is not going away. Human therapists, we love our therapists. They're very valuable in the ecosystem. They're scarce, but we need a broader set of tools. And up to this point, nobody has changed the trajectory of like the size of the mental health challenge. And I think with the technology we have available, we have the first opportunity over the next couple of years to really change that trajectory.
Sounds like you are excited about the
I
future.
am excited about it. It's a pretty amazing time.
Tom Pickett, CEO of Headspace, thank you so much for joining
Thanks
me here
for
at the
being
event.
here.
Let's do it, folks. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for a few headlines you need to know on this Friday eve in the worlds of fintech, crypto, and AI. First up, as we mentioned at the top of the show here at the New York Stock Exchange, the crypto majors all down big on the day. Bitcoin falling underneath 100 to a level it has not seen since June 22nd. Solana down 6.7%, ETH down almost 7% on the day. Next up, Michael Saylor says Bitcoin's fixed supply and long-term adoption will lift it past gold, in his opinion, as the world's largest asset class within a decade, even as the crypto market faces, as we see today, short-term volatility. And finally, Grayscale has filed to list Class A shares on the New York Stock Exchange under the ticker GRAY, appropriately so. It marks a major step in the wave of crypto firms rushing into public markets under a pro-crypto policy environment. Joining us here on the show on the trading floor is Mac Brennan Pete. He is the founder at Project Zero here at the FinTech TV desk. It is great to have you here. Thanks for taking the time.
Thank you. Thanks for having me.
So I love the conversation about you all as a prime brokerage for DeFi portfolios. What did you see as being the biggest problem, the gap in the general DeFi space that you felt like you and your team at Prod could uniquely address?
Yeah, so there's a ton of different applications across crypto. There's perp markets, there's lending markets, there's option markets, there's derivative markets. And when you have your capital across all these different markets, you run into capital fragmentation. If you have $100, you now have $20 here, $20 here, $20 here. And then if you need to borrow against the whole thing, that becomes a problem. Normally you had to go to each individual venue, and if they did have credit ability, borrow from them specifically. Now you don't have to. Now you can borrow against your entire portfolio in one place with one click.
When you do all that borrowing, how do you manage risk as part of that process?
Yeah, so we have a really sophisticated risk engine at Project Zero that identifies each individual market and individual asset on each individual venue that we integrate. And every venue we integrate is also through like an extensive whitelisting process. So something like Bitcoin, for example, would get maybe a better risk profile than like some long tail asset that's more newer in like the crypto world, or even if we provide any credibility against it at all. So that's like a easy way of looking at how we sort of like perform risk. Yeah.
For your unified margin approach, what do you see as being some of the biggest benefit to users? And talk to me about the feedback, because I imagine as you're building a pretty inventive product in the broader financial services space, getting that real-time feedback is pretty important to your adoption and how you move forward.
Yeah, so as DeFi evolves, people want more complex exposures. So maybe they want to be delta neutral, for example, and they want to be long on one venue and short on another venue. If that's the case, each venue will myopically think they're in a much more risky position than viewed together, right? Like if you're super long here and super short here, you might not be able to borrow a lot, but when viewed together, you could borrow a lot more. And so that's like one way we open up new opportunities through like more holistic risk management. And then second is that different venues yield different opportunities. Maybe supplying a stable coin on venue A yields 7%, and on venue B yields 6%. If you can capture that 7% yield and then find a lower borrowing rate against that stable coin, you can then capture that carry trade or that rate trade or any sort of like basis arb as well, which was never before possible with crypto because, again, you had this liquidity fragmentation per venue. So we open up that like net new use case, essentially.
What do you see as being among the biggest misconceptions for the broader DeFi adoption space and where you and Project Zero are situated with regards to being a prime brokerage? Do you see misconceptions? Do you see misunderstandings from the space? I wonder from where you're situated.
Yeah, so one of the interesting things I actually think is when you talk about prime broker in traditional finance, that's reserved for like the big boys, the hedge funds. There's not a typical retail individual that has access to a prime broker. In crypto, that's different. In crypto, it's like truly democratized. So anyone can come and use Project Zero. Anyone that's using DeFi usually uses more than one venue. And so the minute you're using more than one venue, you're at 2+, you have a need for a prime broker. And that's why like we've grown so fast. We're now like the largest permissionless prime broker in crypto. And I want to continue to just serve everyone instead of just like a few select people, which has been the norm up to this point.
Absolutely. I got less than 30 seconds. Quick, if you can, give me some sense on the biggest projects and things you're excited about for 2026.
Yeah, so we're going to be integrating more markets. There's a lot of really exciting markets coming live, already live on Solana. I'm talking about perpetual trading exchanges. I'm talking about lending markets, other derivative markets. We're pricing in need with what users want, and so we want to get a lot more markets live by end of year. And we also want to like sort of surpass the $500 million total value locked number, which we're quickly getting to.
Mac Brennan Pete is the founder at Project Zero, joining us here on the trading floor of the New York Stock Exchange. You're welcome back anytime. Thanks for being here.
Thank you. Thanks for having me.
Folks, don't go anywhere. Much more Taking Stock is coming up after this, including the latest on startups, raises, and rounds. Don't go anywhere. Welcome back to Taking Stock live from the trading floor of the NYSE. Today in the world of startups, raises, and rounds, we'll bring you a few headlines you need to know. First up at this hour, former CEO of Twitter, Parag Agrawal, raising $100 million for his AI search startup Parallel, with a valuation at $740 million. Next up, Klook, the Hong Kong and Singapore-based travel booking platform with $417 million in revenue last year, now filing to go public at the New York Stock Exchange under the ticker symbol KLK. And finally, on this Thursday, wearable fitness tech company Whoop eyeing an IPO within the next 2 years as it looks to become what the company's CEO calls the home of personal health. Speaking of health and speaking of the New York Stock Exchange, let's bring in Brent Saunders. He is the chairman and CEO of Bausch & Lomb, fresh off of Roosing Bell here at the New York Stock Exchange. A great privilege and a pleasure to have you on a show. It's really good to have you.
Thank you for having me.
Can you talk to me first and foremost about the experience for you and your team at Bausch & Lomb, not just to be here at the New York Stock Exchange, but to be up there on that Bell podium today?
Yeah, it was a great representation of the day. Today we had our Investor Day here at the New York Stock Exchange. A lot of people worked really hard to lay out 3-year financial plans, to detail a deep R&D pipeline, and so it was really a nice way to symbolize the closing of a lot of hard work that went into today.
If you don't mind me, I get to talk with a lot of CEOs about Investor Day. We know very little of what actually goes into it. For you, your team, all the executives, the investors that listen in closely, what does the preparation look like for an Investor Day here at the Exchange?
Well, for us, it was a little bit more detailed than perhaps a normal one because I didn't want to do a lot of the talking today. Not because I didn't want to do it, but I wanted the investors to really see the depth and breadth and quality of the talent of the team and really get to see the scientists behind the R&D programs, the commercial leaders that execute the launches. And so I let them do most of the speaking. So for me, it was just an introduction and Q&A and close. But the substance really went to the team, and they worked really hard to get that done. Weeks and weeks of preparation.
Yeah, and we're really grateful you're willing to do at least a little bit more talking for us here live on the show. It's great to have you. Talk to me about the growth areas that you most see for the general eye care space in the market these days.
Yeah, so eye care has generally a pretty durable, robust growth. It grows about 5%, give or take, year over year. We've been growing faster than the market. In fact, the fastest growing eye care company, and we're in everything from contact lenses to the OTC products you see in the drugstore, pharmaceuticals that you drop in your eye, and then everything with surgery. So the lasers, the implants, all the machines, the equipment, the instruments. And so we really surround the eye, and it's been a very durable, high growth story.
So the lasers, the technology, that may kind of lead into my next question, which is really how do you continue to innovate in the space? Healthcare is something to humanity itself, but you got to be leveraging new technology all the time, especially for a company like yours.
Absolutely, it's our lifeblood, and in fact, that's what we spoke mostly about today with investors, is the depth of our pipeline, and frankly, we have so many firsts. The first fixed dose combination for dry, the first drug for ocular pain, the first drug that can control glaucoma and improve visual function. Things like that were really on display today and a testament to the hard work of our R&D team.
What do you see as being among the biggest investment opportunities for the broader eye care space these days, Brent?
You know, I think ultimately it's solving diseases of blindness, so diseases of retina, back of the eye as we call it. We displayed some earlier programs there that really I think are going to help people see better to live better, which is our motto. But really, you know, vision is such an important sense. We cherish it, and when you don't have good vision or you have no vision, it really impacts the quality of your life in a pretty severe way. So anything we can do to restore or preserve that vision is really our mission.
Brent Saunders is the chairman and CEO at Bausch & Lomb, ringing the closing bell here at the New York Stock Exchange. Congratulations on all the success and for Investor Day as well. It's great to have you on the show. Don't go anywhere. Much more Taking Stock coming up after a quick break, including the latest from Scarlett Sieber at Money 2020. Don't go anywhere.
Welcome back. I'm Scarlett Sieber with Money 2020, and on this week's edition of Jargon Translator, we're going to be decoding a term that started as a typo and turned into a whole lifestyle. Whole is quite there. Huddle. Ha, I'm just kidding. Hold. Yes, HODL. Not a new dating app, not a Gen Z slang for hugging. It's crypto speak for hold on for dear life. But let's rewind. It all started back in 2013 when a slightly tipsy Bitcoin investor posted in a forum. We've never done that, any of us, right? I am hodling. He meant to say holding, of course, as in not selling his Bitcoin, but the typo stuck, and just like that, the meme was born. Because in crypto, if it's not a little chaotic, is it even real? So what does hold actually mean? It's a rallying cry of crypto believers who say, markets crash, prices dip, doesn't matter, I ain't selling. It's not just a strategy, it's a vibe. It's diamond hands. It's I bought Bitcoin at 60K and I'm still here. It's I believe in the tech, not just the price. It's basically the crypto version of I'm in my long-term relationship era. But here's the nuance. Holding isn't just about stubbornness. It is also about conviction. Crypto markets are volatile, like roller coaster on Red Bull volatile. So holders are the ones who zoom out. They're not day trading. They're not panic selling. They're playing the long game, betting that Bitcoin, Ethereum, or whatever coin they love will moon eventually. Let's be real. Holding is not for the faint of heart. It's not financial advice. It's not a guaranteed win. It's a mindset and sometimes a coping mechanism. Because when your portfolio is down 70% and you're still tweeting hold, you're either a visionary or in denial or maybe somewhere in between or a little bit of both. Next time someone says, I'm holding, HODLing, just know they're not frozen, they're not confused, they're just riding that crypto wave, eyes on the horizon, hands off the sell button. So that is your jargon translated for today. Back over.
All right, welcome back to the broadcast. With our remaining 45 seconds or so, we get you quickly updated on what to watch for on Wall Street tomorrow. But before we do that, a few very special shout outs to some of our amazing producers here on the FinTech TV team. Happy birthday to Muggs. Thank you for all your incredible work. And a huge congratulations to Karayuki on the birth of your beautiful daughter, Kiana. So thankful for all the work you all do each and every day. Quick wrap up here of the markets on this profit-taking Thursday. The S&P 500 finishing down 1.6%, also down 1.6% for the Dow, while the small caps down 2.7% on this Thursday. It all sets the stage for what should be a very exciting and newsworthy day on Wall Street tomorrow. This is it for Taking Stock. We'll be back tomorrow with a whole new episode. Have a great night, and we will see you tomorrow.